Tim is back. Is that the topic? Tim is back. We see Tim. That's a
We'll give you proper respect, that's for sure.
yeah.
Exactly. Tim's lovely smile is the topic.
There you go. There you go.
Today. I'd like to welcome everybody in. Looks like we are live and streaming to Unconventional Wisdom. We are here every Thursday morning at 10 a.m. Central to talk about the market and what's going on from a bit of an unconventional perspective. We see the market a little bit differently than a lot of people do. Not being restrained by what direction it's going is the main thing. But we try to come on here and just give as much knowledge as we can. And topic for this week, we're going to talk about, to your question earlier, Randy, we're going to talk about some aspects of retirement, kind of what it looks like for young people. The concept of retirement has massively changed over even the last 2 years, I would say. It's always been in flux, and there's always been different things you have to do to keep up with that. But I think the changes we've seen across the market, across the labor industries, across everything, the price of homes everywhere has really made a difference in how to prepare for and how to be ready for that. Even at a young age, how to start saving and kind of start to build that up for yourself. So that's what we'll be talking about today. Go ahead, Joe.
Randy, Mike is trying to be nice because it's my editorial that I wrote. It's not nearly as nice as what he's talking about. We'll get it. Well, I always start off with what we did on the micro moment. We had a fantastic week so far. We're about 100, I don't know, 70 or 80%, something like that. Almost. Well, no, we're 190 through the end of today, and which is already ended for the micro moment sessions. We do those sessions every morning, 8:30 to 9:30. Our people are there, and Tim is there, and Mark and Cezanne are there, and they're actually doing real trades with their own money, and people get to hear those trades, but they learn. The most important thing is they learn from our advanced charting, proprietary charting, when precisely to enter those trades and when to exit those trades. That's what they're learning. They're just not there copying stuff down. They're making real trades, and they report those trades to us, and we report their results right there in the session. Last 8:30 to 9:30 Central Time, Marshall 8:30 Central. And we're here today. We're never in anything overnight, and we trade the indexes, QQQ, and we trade Apple, which is not an index, but it's close to it. And every now and then SPY gets in there, SPY. But that's what we do. It's extremely successful, and you really ought to subscribe to it, and you get it. I think, Mike, don't you on the website have like a 1 week or 2 week free trial? I think so, something like that.
I believe we have a 2. Let me verify that it's still up for you.
And today, what we do on Thursdays in our session here, there'll be an editorial written for this weekend, and we discuss then next Thursday the content of that editorial. I wrote the editorial last week, so we'll be discussing my editorial, which Mike has already given somewhat of a description of what it's going to cover, which is how the market gurus attempt to convince, entice, teach whatever younger folks to invest their money for retirement. And so I'm going to let the other people speak, and we'll get back and talk about my editorial, and everybody else has done what they're going to do. So.
Absolutely. We got Mark coming in here.
Hey, what's up?
There he is.
Back in my little podcast studio thing. Cool.
There he is.
Yeah,
He's got that professional studio that he's put together there, so he can, and he can make all of his fancy movies and everything in there.
That's the Cash Motorhome. Here we go.
That's it.
We have a running joke that Mark's always been rolling around in a cash cab. We got this new setup a couple weeks ago, and we're just convinced it's on wheels and driving down the road right now.
That's right.
He's just got a stabilizer on our camera, so we can't.
It's actually a big Lincoln, Escalade. I'm just in the back, the other way driving.
There you go. There you go.
Sorry, it's a little bit late. So yeah, looking good.
No,
today.
you're good. Mark is a coach for our micro moment technique, which is our near-term options. Near-term being the slow pan. I try to focus as you do it, but it's just distracting, Mark. I love it. And he's getting into our futures. We are in the process of finishing up some final details on the charts to launch our new futures program. We have not worked as much with that financial vehicle, but Mark has a lot of experience with that, so he's been a great resource to start bringing that into MMT. We're doing it with futures and crypto. We're bringing in, we were mostly options before, but we wanted to start to branch out, expand our reach, and expand our teaching for you guys to stay with the times. I mean, these vehicles are available for our use, right? We just have to think about them in our different way and figure out how to view those. And that's coming up shortly, right, Mark?
So we're talking about another class this month. I don't know what's going on yet. I have to talk. I'll have to figure out what that is. We're working on everything else behind the scenes. About the charting, right? Working on that. So we're doing some testing and everything. So we're trying to get all that together so that we can, when people start, they have all the tools they need and we can make this work, right? So it's important everybody comes in. We want you to be successful. So we want to make sure the tools are working properly and everything's in place. And I think it'll be really exciting because, like Mike is saying, this is kind of a new thing for us here, especially with the crypto and the futures. And it's something that's been evolving out there in the industry. And I think it's really a good time for us to bring this out. And I think everybody will really benefit and enjoy it itself. So,
absolutely. Yep. And you've been killing it on the micro moment sessions as well.
It's some crazy fills lately. The market's been, it gives us sometimes, really good opportunities, and we're able to jump in there and take advantage of it. So that makes us feel good when we do that, right?
To show you, he had 2 trades today on QQQ. One of them 18% plus return, and the other one 12% plus. Fantastic. Okay.
And those are about under 3 minutes. Mark, is your kind of time frame?
Yeah, it's under a minute, I would still say, but maybe a minute at the longest. But had some trouble filling on the exit. I was like really shocked. Usually it fills fast, right? I just had to readjust my price a few times, and I was letting it run a little bit. And I was adjusting my price, but then I couldn't get it to fill, and finally it filled. And I was like, wow, okay, nice.
Yeah, 18% is massive. That's incredible. Yeah. Good. Also on our micro moment program is Tim. How was your day, Tim? How are you feeling about your trading day?
Had a great trading day today. Up 42 cents on 5 trades. So
wow, that's awesome.
Very good
nice.
Day.
And your fills were around. I mean, you were filling in like $1.70, right?
A little higher today, in the low 2s.
Low 2s.
Yeah, I'm going in 2 and 3 deep into the money now.
Nice.
And it's paying off nicely for higher profits.
Yeah, that 40-something you mentioned, people that aren't really tuned to what we're doing doesn't mean a whole lot. Let me tell you what he really made, really over 25%. Fantastic just for today, just for the 1 hour. It's incredible.
Absolutely.
And so that's the beauty of the technique, right? As Joe was told before, we don't care which way the market's going. We're just jumping on these trends that are happening and folding, taking advantage of those, making our profits, and moving on.
Yep.
And Micah, I think we're so lucky today to have with us Randy.
Absolutely.
Back.
Hey, dude, your trophy? Where's your trophy, man?
Back and world famous.
That's right.
It's
that's right. Yeah.
He
He wasn't able to be here last time because of his presentation to the world at the major baseball stadium.
So, yeah, Randy, give us a cinematic overhead view of what happened in Braves Stadium. I want to say.
It was the Braves AAA team. They're called the Stripers, and they're actually in the town next to Atlanta. So they're like about 15 miles away from the Braves pro team, it's their AAA team, and at the Atlanta metropolitan area is big enough to be able to support, both the major league and the AAA team. So actually, going to a AAA game is much more fun than going to a big, huge pro stadium. I mean, it's the stadium held 10,000 people. There weren't that many there because it was the last game of the season, but it's just more relaxed, more fun. It's that both two of the three grandkids, my son and it took his family as well as me and my wife went, and I have three grandkids, and two of the grandkids got foul balls, so they were all excited, and they, of course, now they think that every game they go to, they're going to get a foul ball. So, but we had a good time, and then we had an award ceremony and a banquet, and had some good barbecue beef or a barbecue pork, I think it was, and
Nice.
and got my MVP award.
Nice.
Absolutely.
And now that's better though.
Is
It's
coming.
better. Next week, he even gets more important.
Yeah. I'm heading out. Actually, tonight, flying out to Phoenix to play in the World Series tournament out there. So,
All right. Do you have any cards with your like playing the baseball cards? Are you facing on?
actually, that you say that a couple years ago, I was pitching in the stadium in Goodyear, which is where the Reds and the Indians share spring training, and some guy in the stands was taking pictures and stuff. And he went over to my wife and said, what's your address and stuff? And she said, oh, why? He goes, that's okay. I'm going to send you some stuff. And all of a sudden, in the mail comes a big like 14 by 11 picture that looks like a big trading card with me on the pitching mound, and then he made up little trading cards as well of me with stats on the back. It's
Wow, very cool.
I haven't found where we when we moved, we packed up that picture. I haven't found it yet, so as soon as I find it, I'll put it up on the wall. You'll be able to see it. But yeah, it looks like I was like a major league pitcher, and it's like, no, I didn't pitch in the majors.
You're just like, turn around the card and the stats are not there.
Yeah, because he photoshopped and he filled the stands up with people there, and behind me is the scoreboard and everything. So it's
Cool.
Very cool.
it's
Very
pretty
cool.
cool. Yeah,
Well,
yeah, we have a good time out there. It's fun.
Yeah, you're the only one in the room with a trading card, so I think you should feel proud of that. It's pretty.
There we go. At the next Masters, I'll bring it and put it on the table next to me, so people can see. They'll think I'm famous. Actually, just a funny story, just real quick. A good friend of mine, we actually started kindergarten together. His name's Gary Carter, and he's a Hall of Fame catcher. Unfortunately, he passed away a few years ago of brain cancer. But when I'd go down and stay with him for a week at a time, a couple times a year, and we'd like go out to dinner and stuff. And of course, the kids would come up and they'd recognize him. They ask him for his autograph, and I'd be standing next to him. And so then they would hand me the baseball, and I go, "No, you don't want me to sign on that baseball. You just keep his signature on there." But they kind of figure everybody's a ball player.
You could have signed it Mickey Mantle or somebody like that.
Yeah. They wouldn't have known because I mean they were young kids, but they were just trying to get everybody's autograph. So
that's fantastic. And you recently finished up a charting for momentum.
Last weekend, taught everything about advanced charting, how to use advanced charting. Advanced charting is a fantastic proprietary charting package for micro moment trading. It's the slower version of the intraday streaming chart that Mark and Tim use every day on their in and out in a minute. But we use the advanced chart. It's got I think 21 technical indicators all kind of rolled into one big chart that lets you learn how to read to almost predict the future of where an equity is going. And so then you can learn how to use that for any type of trading. It doesn't matter what you're trying to do. It just gives you information on which direction it's headed, how strong it's going in that direction, and does it look like it's getting ready to turn around. And so you can do that for credit spreads. You can do it for cover calls. You could do it for momentum trade. You can do it for leaps, any kind of debit credit spread type of trading that you want to do. It's going to give you way more information to be able to make a better decision.
Yes.
Absolutely. We were discussing it on the MMT show yesterday, I believe, talking about what we learned from, I believe it was like L7 and 8, and how to apply it to even the micro moment. And one of the core features of our charting, and really kind of our methodology, is the phases that a move goes through. In any time frame, right? That if you're zoomed in or way out, you can be on a 1 minute or a daily chart. Every stock and ETF goes through cycles, we call them. There's a birth into the momentum, and then ultimately, right? It starts, it goes, and then it stops. And so, breaking up into those phases of that life cycle, it works in any time frame, because I mean, micro movements look a lot the same as those bigger ones once you're zoomed into the context. You're looking at 20 minutes. If you're looking at 20 days, you're going to see a lot of those same things. You won't necessarily see the finer movements when you're zoomed out, right? If you're looking at the daily chart, everything that happens on a day is just one candle. But you'll start to see some of those same patterns. So learning at the slower pace and at the slower charts gives you more time to kind of process that information. As you get better at it, you can start zoom in and tune in the more finite movements that go on. So fantastic course for MMT people, and
Definitely.
kind of any level of learning. I would say it's really helpful.
Yeah, 'cause it's really in depth, right? It's advanced charting in depth, which is
Yeah.
actually rolls up to our MMT charting as well. But so it's really a good tool. If you have the opportunity to go out there and do it, it's great. It'll help you out.
Yep.
Yeah, so the concepts for our daily advanced chart, which is what I teach, it's you learn those. It's the same concepts as the moment by moment one that you use on intraday streaming. You just enter different types of trades between them, but by having the intraday streaming chart, which is extremely important if you're going to try to get in and out of something in a minute, you have to have the chart that Mark and Tim use. You can't use a daily chart to say, well, it looks like it's going up, because you're trading the intraday swings, intraday swings on the equity, and you got to have that chart. Otherwise, you're just shooting in the dark, and you might as well just roll some dice. But with the intraday streaming chart, which is proprietary to micro moment trading, that is what gives the ability to be able to generate those great returns that Mark and Tim get.
Absolutely. Absolutely. I'd like to welcome everyone. I forgot to do this at the beginning. I'd like to welcome everyone from Twitter as well. This is the first time we are live on Facebook, YouTube, and Twitter. And then I think LinkedIn is on the way as well. We're getting some updates and upgrades to our streaming platform here that puts our little names in the corner all cute like. And we're going to be streaming on multiple platforms at a time. So if you have any questions at all, you can type into the comment box on whatever you're watching from, and we can see those all and answer those as they come. So it's good to see everyone on Twitter here. We give some live updates and some morning encouragements on our Twitter. It's the only one with a different handle at Moment Trades. Everything else, every other platform is micro moment trading online. So welcome Twitter. But if anyone has any comments or questions, just throw them in. So Joe, give us a baseline of what the editorial was about, and
Okay, what the editorial was about, and I really, get hung up on this stuff. It seems like for the last 100 years, everybody's trying to always influence younger people with the advantage of getting into the market. They have this one. It looks like they all use the exact same printed message. And so I took one of those printed messages, which I had just received via the email a few days before, and I took it and I broke it down to the things that they always say that are not true and that are not relevant because they don't work. but yet they all keep saying the same old things. And I call the editorial another example of a financial coma. And it's a coma. What I want to do is start off. This gentleman that wrote this, and I put it in and quotationed it, so I would not. There's no changes. His name is Brian Stivers. Stivers, I suppose. I was not a financial consultant. What he wrote here is what every financial consultant has written. Time started, and there's nothing new. But here's a guy that's trying to convince you to read this, and call him up and let him be your financial consultant. Well, he doesn't know a damn thing about anything. It's obvious from what he's writing here. He's writing, I don't know how old he is, but he's probably been around a little while. Exactly. You get it fully, so there's no info. Then I say these are my comments. Let me get down to my comments. And okay, end of the article, my comments. Okay, well, my comments are, well, it seems like you've seen this article you had. Advisor says the exact same thing about what it takes to have $1 million retirement. Now, the $1 million, remember now, $1 million today retirement when you're 65 years old, and they start off at 25. So that's roughly 45 years or so. 45 years. This is how you're going to make $1 million in 45 years, which ain't going to be worth crap. You're not going to be out there at the restaurant for $1 million 45 years from now. It's sort of like almost what the mutual funds do. They say, put your money with us. We're going to get you 5, 6, 7% a year, which they struggle to do. A year, and you're going to have $1 million by the time you're 65. Well, they're not going to get 5 or 6 consistently because they never have. That's neither here nor there. So, 3 important things in this editorial. This is me saying, when it comes to investing, there are 3 very important components. The amount that you contribute monthly, that's in all these things, rate of return, and how long that you have to save. So the rate of return, how much you start off with, the rate of return, how much you're going to get on a monthly basis, weekly basis, whatever basis, and how long you're going to have it. Now, there's certain things that just don't work. Amount that you contribute, that could be, this is some young person in their low 20s, late, maybe mid 20s, don't have a whole hell of a lot of money to invest. And so, but they're going to do this now. They're going to do this for 45 years. 45 years from day one, they're going to start investment. Micah, have you been doing that? You're 20 something. You have in every single month.
Not like that. What was the amount they were recommending?
Well, in this
like $1,100 or something.
Yeah, $1,100. It's depending on the rate, right? The interest rate, but yeah.
Yeah. Okay, so that ain't going to happen. Okay, that's number one. There'll be some amount, but for a 25-year-old, now I think when I was 25, you're single probably. You just may be getting out of school. You don't have a lot of money, but you sure as hell not. Your brain is not such that you're going to allocate every month, put money into a damn savings program. It's not going to happen. So that's not going to happen. So that's one of the 3 is already invalid. Your rate of return.
I mean, the amounts to stay realistic as well. I mean, looking at the changes in rental prices, and the lack of change in wages, is just something. I mean, you could do to what people make a month, what their rent is, and what their food is, and I mean, the average person in the room is just not there. I think that's
exactly. They don't have to think about it. But anyhow, you're going to do this for an awful long time. Now, the rate of return, 25-year-old really typically not too smart on what rate of returns are, but what they start off with, which is usually, and all the mutual funds use it, 5 or 6%. Sometimes they make it, sometimes they don't, but 5 or 6% is what they start off with. And the other one is just nonsense. You only need a few years. What we're saying here, number one, nobody's going to do anything for 45 years. So why don't you do something? Why don't you invest some way like our micro moment stuff or Randy's covered cost stuff? You can do it in a few years. That's doable. Also, when you use our techniques, you don't have to come up with $1,100, but one time in your life, you start off with $1,100 one single time in your life. And then you use Drive Car Service and you follow those guys, and they're making today, they made 73.1599%. And, they'll be over 200% for the week tomorrow. Well, those kind of rates, you can put in a small amount, $1,000 for anybody, almost anybody, $1,000 for the entire life. They're never going to put another penny in, and they're going to compound that. That's the difference. And you never see about any of these articles, nothing ever about that. And they say, you could compound at 5 or 6% for 45 years, and then you're going to have $1 billion, which is not going to buy you crap. Okay. So number one, trying to convince a 25-year-old of all this stuff, more of this stuff. When you're using a technique like we and effectively do, is you put 1,000 in one time. If you made 6% per week, and you're following these guys, they're making 73% today. You make 6% per week for just 2 years. Here's the time frame, not 45 years, just 2 years. You're going to have $850,000 in 2 years. Just do it.
Now, I do have to clarify on that, like the amount of liquidity and options, right? Because that's 6% on the whole amount.
That's 6% on your original $1,000. That's 6%, and then the next week you do 6% on that 1,000, which is up 6%. In other words, you just keep compounding that money.
Yep.
But you're not adding anything out of your pocket to that account. You're just using the money in that account, and as it grows.
I mean, that's the biggest thing about self-directed investing is the compounding aspect. If there's anyone brand new to trading on here, all it is if you have $100 and you make 10%, you have $110. If you do the same exact thing, nothing different, and do it again, that same 10%, you now made $11. So last time, because you're on 110, not 100, right?
Yeah.
So every time you go up, you just make an extra dollar doing the same amount of effort, same everything, right? So that's that concept of compounding. That's just one time. So,
but instead of doing this over 45 years, if you take that 1,000, you get 6% per week for 119 weeks. I'm trying to keep this as closest thing to when you first make your first million. That'd be 2.28 years, which would amount to $1,026,000. So in 1 year, in other words, 119 weeks, you've already got your $1 million more than your $1 million, $20,000 more than your $1 million that you hope to have in 45 years. 45 years. There you go. And so by the time you just keep doing that, and you don't have to consistently do it every day. And eventually you're going to say, I've got $15 million. I got $20 million. I don't have to do this every day. And so you don't have to do this every damn day. But my whole point is, you're only 20 something. If you can dedicate just 2 weeks, you're going to already have. You can just sit there and earn interest, and you'd have money at the end of another 43 years or something like that. But the point is that every single article says this exact same thing, and things have changed. For some reason, all financial consultants are brain dead. I guess 3 or 4 years ago, they just became brain dead. It was like the virus, the COVID-19, whatever. That's what happened. They all became brain dead. They all said the exact same thing. Where things have changed, trading platforms and no commission trading, things have changed. They have not given any recognition to anything being changed forever. And mutual funds don't either, and that's why mutual funds don't make anything. They say they're going to, but no, because you got those same old guys in there on those beach. I don't know what the hell they do when they go to work.
Yeah, I think there's a fair amount of intentionality behind how institutions approach things like that. Institutional investing is something that's made intentionally very complicated. There's a lot to it, and you can see the moves intraday. I mean, Tim and Mark, especially on your time frame, you guys can see when big money buyers come in, and the effect is massive and instant. I mean, some of those different movements by the big number traders or the institutional numbers that come in, that can make a massive trade one way or the other. Those are the types of things that you can get caught in, right, or stopped out of. All these things. Basically, the market is kind of their world that we're living in.
Micah, you're totally, absolutely badass wrong. What you're talking like a damn mutual fund guy that doesn't know shit about anything, because that's what you're talking about. You're talking about, you don't do any of that stuff when you're using our techniques. You do not do one single thing what you're talking about. And for you to sit here and say about, oh, well, you've got to consider that. No, you don't. No, you don't. What the hell's your head?
That's what I'm saying. The institutional money has an effect on the market that we have to be aware of in order.
We're not talking institutional money. We're talking about what you're going to do. You're only 25 years old. Well, you're actually not that old. We're talking about a 25-year-old. He's not going to get concerned with all that crap. He said, I'm going to put in $1,000. I'm going to do this. I'm going to follow these guys.
Yeah, and I've had to be very aware of the institutional money behind how things move, because it can.
Who cares how things move? That's how you do.
With a small account, right? So I can get overpowered by a single institutional move. We have to be aware of those.
No, you're not, Mike. What in the world are you talking about, Mikey? What in the world are you talking about? How you going to get overpowered by a single institutional move? I've been doing this a hell of a lot longer than you have, and I don't even know what the hell you're talking about.
Let's go back to the article. So, Joe, the one thing that does comment in that article is about, if you make a higher rate, you can invest less, right? Which is, still a long-term event. So for us, making the higher returns it shortens that time frame considerably, right? To something realistic to me. It also allows us to utilize then our funds more readily. We can pull money out, we can buy stuff, we can do stuff. Where, if you're investing over this long-term period we're talking about for 45 years, I mean, today, especially in today's society, who wants to wait that long, right? Most people, like you're talking about, don't have that.
Nobody, and they're not going.
Yeah.
Well, other things happen, Mark. Other things happen. You get divorced. You die. A lot of people die in that 45 years.
Yeah, that's right.
So the whole point, none of that's achievable when you got to do it because you can't do something straight out for 45 years straight. So you got to do something, and using compounding, the most powerful financial tool on the face of the earth. That's how you do it.
Yeah.
When you compound and you want to at least get some few small percentages a week, and that's what we do. That's what you guys do every single day.
We do something different, right? So the definition of insanity, right, is doing the same thing over and over, expecting something different. So unless you do something different, you're not going to get there.
And most 25-year-olds can't even spell institutional, much less institutional investor.
That's right.
So, Mike, they're not going to think that.
I would disagree. I think we're in the most educated period of young people that we've ever had due to a necessity of it. We're trying to, come out of college and everything like that. Or I personally didn't go to college, but when you have, houses, if you're talking especially in a financial sense, when you have houses going up 40 to 60% over the course of 2 to 3 years, it's very clear that you're not going to be able to, graduate from college, work your job, get $100,000 a year pay raise to be able to keep up with those things. So we are trying to use techniques, and also we're trying to use a lot of additional obstacles that we face.
That's my whole point. You can use our techniques. What I'm saying.
Yeah, I was saying that too.
Okay.
Yeah, I'm saying institutional does not have our best interest in mind, because they would like to say that 5% a year on our $200 or $100 a month savings is going to provide some sort of emotional stability in the long run. And I don't think that's really true, because a mutual fund can take a 2% loss in a year on our $100 a month.
Just think as a mutual fund
savings, and it's not going to have an effect.
So we have mutual fund. Yeah. as a mutual fund group, right? So no matter what you do, if you earn money or lose money, you still make your 2% or whatever it is the fund charges, right? So these guys, the deck is stacked in their favor for sure, right?
Exactly. The act of moving the money, which the institutional world, they make money off of trading, but also they make money off of our activity trading.
Asset management, yeah.
Brokers, mutual funds, everything. Yeah, absolutely. They get paid for simple activity. We get paid for a profitable trade, and still pay them in those profitable trades even. So
to me, the overall takeaway is, right, mutual funds are long, they're slow. It's like the no-brain kind of approach. You want to try and do it. It's up to you. This method we have, or the methods we have combined between stuff that Randy does, or the micro trading and now futures and cryptos and stuff, if you took a piece of your money and started doing this, your return will be much better than you can hope to achieve, I think, through that. So,
well, let me tell you, being the only one that's ever worked, being the only one here that's ever worked for a Main Street broker, being Merrill Lynch, I can tell you how to make any money, because there's not a Merrill Lynch guy that knows his ass beholden ground. I'm dead serious. That's why. And I'm the only one that's been there. You guys have not. I can tell you. That's why.
Matter of fact, Joe, one time I applied for a job where I was going to do that. I was going to work for a brokerage firm like that.
Yeah.
And so I was talking to these guys about it. I said, well, how do you know what stocks to pick, and how do you get people to decide, that's the one you want to buy? And he goes, it doesn't matter. We just tell them stock, and sometimes it goes up, sometimes it doesn't. And I'm like, oh my God,
Right. Their objective is not to make you money. Their objective is to make themselves money.
Absolutely.
Right? And the more activity they move in and out of your account, the more money they make. It doesn't matter. What we have done with Micro Moment is we have taken 40 years and compressed it down into 6 months, essentially, of earning potential, if that long. Simply by the fact that we are taking responsibility for our own financial future, we've learned a simple technique for generating returns very, very quickly. And that makes all the difference in the world. And the problem is, people are raised to believe that the only way you can do this is over a vast 40-year career at one company, and that does not exist anymore. The only one who's going to look after our own financial future is us.
And that's really where it comes down to, Tim, is there's a choice. You can go the long route, give someone else your money, have to have lots of money, like Joe talks about, hundreds of dollars a month saved over 40, 45 years to hope you have something at the end, right, earning maybe 4 or 5% a year. You can do that and take that long road, or you can take control of your own money and generate much better returns with a little bit of work by learning a process and a technique, not just guessing, not just hoping. What we teach is a process that has rules, and you follow the rules, you use the chart, follow the rules to generate the income. You're in control, and like you said, Tim, nobody cares about your money more than you do. And why give that control over to somebody else and hope that they're going to do something? And like Mark says, they're concerned with making themselves money. They're not concerned with whether they're making you money or not.
Exactly. Let me follow up on that. And this kind of blends in with what Mark was talking about. When I was with Merrill, so one time they called the office together, and 2 days later, this huge executive with Merrill Lynch is going to come down and speak to our office. And he gets there, and he gets up in front of the podium, and the first thing he does is pound on the podium with his fist like that, and says, "I just want you to know, you can take every penny your investors have, every penny, do any damn thing you want to with it, and there's not a damn thing they can do about it." That's exactly what he said. Now that's the attitude. That's the attitude of the brokerage committee, community. That's how it is, and that's exactly how it is. That's exactly how it is now.
Yeah, it's always been that big kind of club thing, right? They kind of control the money. They do all that stuff. It's great for them, right? It's stacked in their favor. So,
exactly. Yeah. So
the point is, take control of your finances. Understand what you're doing with it. That's the important thing, and apply some of these techniques. And I think
the whole point of that article is that's why that article evidently is very successful, because it does convince a whole lot of really young people. But then again, people do crazy stuff when it comes to financing. What's my favorite bank, Mark?
Wells Fargo.
Wells Fargo. Every day, almost every day, that bank is the most crooked bank on the face of the earth. They ought to be banished from society. Everybody that works there ought to be burned and tarred and leathered, whatever you do to people. Every day. The government has penalized them billions of dollars because they steal people's money. And just the other day, they had another incident in another big, the bank. They got fined, I don't know, $36 million again because they were just taking money out of people's account. They're crooked. But the bank is the worst bank on the face of the earth. And everybody in there, every officer, there's piece of
That's
crap.
crazy when you get that big and you have that kind of money, like, whatever, okay, we got a fine, just pay it. And they keep doing what they're doing. It's like crazy.
Yeah.
Absolutely. The other thing I wanted to bring up in regards to this is if we're talking about a situation where less money is present, right? We're talking about the three factors: how much money you have, the rate of return, and how often you add that amount of money. Those are the things that will turn an inch here into a mile there. There are two. Because of the institutional awareness that you have less money to work with, there are two things that are going to be thrown at you as a young person. And it's having to choose between leverage and margin. We talked a lot about this last week. If you want to go look at the recording, but margin is going to be presented to you probably as the option, right? Because it gives you access to more money. It does give you access to more money, and any losses you take you're just as liable for. Margin is a very dangerous game. You can look more into it, or again, go watch our recording. The other is leverage. So if you think of it like a seesaw, right? Margin is asking a friend for a bigger weight to put on the other end. Leverage is giving yourself a longer pull to get more pressure, right? It gives you more power because of your positioning, not necessarily because you borrowed from, the institution themselves. When not only, are these things true about the institution that we've been talking about, but then when you use margin, you are trading on money you also borrowed from them that you have to pay for from them, kind of like a pre-approved loan situation. So, I mean, you're giving them commissions, fees, margin, everything like that. Lord forbid you end up on the wrong side of margin. You also have to pay fees on that, all sorts of things. So, Randy, could you explain a brief difference on leverage and margin, and then we'll probably close it out for the day. But I want people to be aware of things to look into, platforms and things like that.
Sure. Well, leverage is what you can use with a small amount of money by trading options. So you're leveraging the money that you have, because instead of buying a stock for, well, let's say Amazon is trading at $3,318 right now. If you wanted to buy 10 shares of Amazon, you'd have to have $33,000, right? And how many people have money to buy a couple shares of Amazon? But you can buy an option on Amazon that goes up and down along with the price of Amazon, and you can do that for a few dollars. So you're leveraging your money to be able to trade Amazon without having to spend a lot of money. You're not borrowing any money. You're just using leverage to be able to use a small amount to still control a position and have it go up and down the same as the stock would. Where margin means you're actually borrowing money. And when you borrow money to go out and trade, that's probably the worst thing that you can do, because when you borrow it, especially from your broker, it's called margin. If a stock starts going down, they're going to get their money back before you get anything. So it could go down a little bit, and they call you on the margin. They sell your stock, take their money, and you may not have anything left over, even though you put money in at the start. And so trading on margin is not the good thing to do. Borrowing money, I mean, you hear stories all the time. Somebody, mortgaged their house, closed out their retirement account, and went out and borrowed money to go and trade in stocks, and then they lose their shirts. That's not the good thing. But by using the leverage, and that's what like Tim and Mark do every single morning, they're buying options on Apple um,
Triple
or
Q.
or the triple Qs for $1 a share or $2 a share, and those are things that would cost 130 or $300 a share if you were actually just buying the equity itself. But they're trading the option. They buy that option, and then you have no more money at risk than whatever you put in to buy. You can't lose anymore, and they don't lose. They win.
Whereas
But
margin, you can go
with margin, you can lose more money than you had at the start, and that's not a good thing. And so by trading with the options, that's a easier way to use a smaller amount of money that you have. So when you're starting off, you might only have $500 or $1,000.
Right.
But you can't buy very many shares of a stock for that. But you can trade options even on a daily basis and generate 3, 4, 5% return, and quickly grow that $1,000 into much, much more than that. And
Yeah.
and so that's the whole concept, but behind trading the options, which gives you that leverage.
Yeah, and to give you kind of a practical example of that, the leverage that we have is 100 to 1 with options. We buy one contract, we control 100 shares of the underlying equity, which in our case is Apple. If I were to buy 100 shares of Apple at the current price, it costs me $14,400 to make that trade. I make that trade at a dollar. I'm spending $400 to control 100 shares. That's 100 to 1 leverage. That's huge, massive leverage. I don't know anywhere else where I can control that much underlying stock at that price, and be in and out of a trade in less than a minute, and add 2, 3, 4, 5, 6% to it. It's just it's crazy, I mean, it's almost crazy that people don't believe it when I explain to them what I do.
That's the problem. Yeah.
They go, no, that's right. You're making 4,000 a day trading Apple stock an hour a day. How's that possible? Well, I'll show you my trade sheet. You don't believe me? I'll show you my trade sheet.
And how many dollars, say, your average, gain on Apple, how many dollars would the stock have to move if you bought the stock to get the same return, percentage wise?
Oh gosh, I don't know. I need to
Well,
figure that out.
1,000 shares at $1
Yeah.
buck, each time, that would be, $1,000, right? So,
Yeah.
but that's during the day. So he's talking about per day. Some of the stuff is going on and stuff, and it's like, it's amazing.
Yeah.
Yeah. And I'll make 4 or 5 trades a day at, of 100 contracts. And, I can lose 4 out of 5 trades, which never happens, and still have a profitable day because of the technique in the way that we tightly control our losses. You can lose 80% of the time and still have a nice profitable day. I can't remember a single time since we've been doing that we've had 4 losses in a row. In fact, I can't remember the last time we had 2 losses in a row.
Yeah, it's never significant. Even it is. It's a few cents here. We get in 2, 3 cents, sometimes maybe 4 max. Okay, we're out, back in, make another trade, make it back up. Not a problem, right?
Yeah.
And that's key to that's a testament to the technique and the charting system that we use to make sure we are following the trends and doing what we should be doing to get it out.
Yeah.
Absolutely.
And like you said, Tim, that's only an hour a day. So it doesn't take all day to be able to do this. So people can even do it around their other activities. You could be a college student, right? What's a class? An hour a day, each week is like a class. This could be like one of their classes. They could just schedule in this time every day. I'm just going to trade and generate income. If they want to go to college and learn something, they can still generate income while they're doing that. And the even better thing is by learning how to generate your own income, it allows you to do any job or endeavor that you decide. You don't have to chase something because it pays a whole lot of money. There might be something that you would rather do that maybe doesn't pay as much, and you can supplement your income by just making most of your income using the micro moment trading.
Absolutely. Would you, as a college student, would you rather wait tables at
There you go.
whatever the minimum wage is, $2 an hour plus tips, or would you rather do this? I think it's a no-brainer.
Yeah.
That's the other real benefit to me. It's not, okay, make decent money, but I have this freedom. I can go anywhere and do this, like anytime.
Yes.
I can take a day off. Okay. So it gives you that freedom that you wouldn't normally have in a job, regular job all the time.
To give you room to do even more other things, all sorts of things. It does take some planning for that transition as a young person. If you're already waiting those tables, but you can do it. I will tell you, a lot of time in hospitality, and it is possible to make that transition. It's really cool.
The problem is people in general, right? People are lazy. So you show people some techniques you got to do. Oh, this is too hard. Like, what? Are you kidding me? Spend the time, learn it. I mean,
and also, like we were talking about earlier, the narratives of it being, oh, this is complicated. Let a professional.
Let a professional.
That's what the institutions want you to believe.
That's why you got to wait 45 years.
Yeah. It's too hard for you to do. You got to give me your money and pay me to give you 6% a year return. You can't do your own. That's it.
Wrote the article, the professional.
Exactly.
I was just thinking, this whole thing fits into that new thing, the gig economy, right?
Yeah.
So you get to control when you do it, where you do it, how you do it to generate your own income, as opposed to the old 9 to 5 that you listen to your boss that you have to be here at this time and do these things. So we were ahead of our times, Joe, of being able to teach people how to generate their own income.
When I was growing up, small town, the richest guys in town were the doctors, the plumbers, and the electricians and the welders. They made more than the doctors, the welders, and the plumbers. Today, a kid can get out of high school, and there are companies around Fort Worth, Dallas that pay $100,000 a year while they teach him to weld. Now, give me a break. Then you got some guy goes off 4 years of college, lives in the basement of the house with parents after that, and that's it. So a lot hadn't changed.
So yeah, I wish this had been around when I was in college.
Oh yeah, absolutely. Well, see, but Tim, things have changed so much because now there's the online brokers, the internet. You can do your own trading. Back when we were in college, you couldn't do this. It was impossible to do the trading that you're doing right now. Back when we were in college, because you couldn't. You had to call the broker. You had to take a long time and spread it out and pay them a whole bunch of money to do one trade. And it wasn't, you couldn't do it, say, buy and then sell a minute later. It couldn't happen. Right. But now, because of the online brokers and the internet and even the phones, and everybody trades with their iPads, you can be anywhere that you can have cell service or internet and do your trading.
I go back further than Randy, and he's talking about he had to call them on the phone. I go back where you had to go to the office. You had to go to the office and stand in line. Yep.
Yeah. So So now the younger generation wants things right now anyway. This is the way to do it, that you can start seeing the results, the fruits of your labor, so to speak. You can start seeing those returns right away instead of waiting for 45 years to tell whether you have enough money.
Right.
Absolutely.
That's right.
Absolutely. All right. Well, we are rounding up on an hour. We always encourage people when you get started. We're already at an accelerated rate, right? So you can take your time, do some virtual trading, learn your platform. Then when you start, trade with one contract, $100 at a time. Most you're going to lose is $10 to $12 unless you're being silly. Start slow, take your time, because even doing that, you're going to be so far ahead of everything.
Hey, Micah,
Those things. And
you hit it exactly on the head, Micah. You hit it exactly on the head. And I can't believe that I didn't think of this. You say it already. Is virtual trading. We didn't have back in Randy and I was starting. We didn't have virtual trading, so you had to use real money. You've got virtual trading, and you hit it exactly on the head. There's no reason you can become a total genius expert using virtual trading and never risk a penny.
That's how I learned to trade myself, right? I had to trade real money to get there, right? And there was no virtual trading like you guys talking about. So it's come a long way. So there's a lot more tools and things out there to help you learn this and get good at it before you go live. So it's great.
And Mark, that I'm virtual trading now with the futures contract, so I'm anxious for you to get the service put together so we can learn a lot more and follow along. But I'm doing virtual trading now almost every day, and really looking forward to that service, because that's 24 hours a day trading. You can do it just about any time that you wish. You don't have to, right? You don't have to get up at 3 a.m. to do it, but it'll be available at that time.
So I see a couple comments out there that says Travis and from Robert, they're asking about the futures update sessions. That's all coming, I think, in the coming weeks. So we should we're getting closer to that. Hopefully, I'm not sure exactly, but maybe later this month, if not into November, early November.
A couple of comments that people want to know about the futures trading.
Yep. And so we're still working it. We're getting everything put together, like we said earlier. Iron out the bugs, make sure all the tools are in place so everybody can have access to that and be successful. And so stay tuned soon, very soon.
Yep. And that's another service that we're offering. We have 3 great services. If you like the speed of the trading we do in Micro Moment, we do that every day. If you like something that's a little longer, you have Randy's covered call techniques, and very soon Mark's going to have futures trading. So 3 very, very strong products. Just make a decision to be a self-directed investor and join us.
Fantastic.
Okay.
Well, thank you everyone for being here. We will see you next Thursday at 10 a.m. Central for another show. Again, we are going live on Twitter now, hopefully LinkedIn soon. I think the LinkedIn you can only post to private groups. So it might only be accessible to our direct followers. Not just on our live page, but we will see what happens there. But Facebook, YouTube, and Twitter, thank you for your time. Thank you for being here. And we will see you soon.
See you later.
Any questions you have about any of the services can be directed to this email I'll throw up. So,
okay. See you later.
Thank you, everyone.
Great day.
And have
a good weekend. Take care, everybody.
See you guys.
Bye-bye.